Hello and welcome to the Smart Money No Money Show. I am your host as usual, Keith Richards. I'm President and Chief Portfolio Manager at Value Trend Wealth Management. Today we're going to talk about utilities, and I want to give you a heads up that I've taken the idea of talking about utilities from my upcoming presentation at the Money Show. Now, at the Money Show, I'm going to be doing a sector rotation model presentation and how you find the leading sectors. Utilities was one, but just one of the leading sectors that I found are starting to see some money flow come into them. And my model is designed to not look at the stuff that's worked for the past 6 months or the past year, because you're into sort of an old horse by that point. I'm always interested in finding the new emerging leaders. And it turns out that utilities looks like it may be one of those. As I said, I present 2 or 3 of them at the Money Show, but utilities is the one I decided to select for this video in greater depth. Come to the Money Show. You can go to the blogs that I write and get a link to get a free pass to the Money Show. I'm on Saturday the 14th at 3 p.m. If you can make it, I hope to see you there. And I'll have my books on the cheap, so you can buy those. And I just love meeting people in person that watch my videos and read my blogs. So let's talk about utilities. I'm going to go right into screen share, and I'm going to actually have to back up this because I was doing some work on it. So pardon me. So we're going to talk about putting some power into your portfolio. And the word power is important because utilities, there's many different types of utilities. There's gas, there's renewables, stuff like that. We want to talk about power a little bit because, as you guys may know, I'm pretty bullish on the need for nuclear and other types of power to support our massive upcoming power draw due to data storage, due to AI computing power, due to mass immigration throughout North America. This is all going to put huge demands on our power grid, and it's like the perfect storm because we're seeing all of these happen at exactly the same time. You know, AI has become the new thing. Data storage is growing bigger because of AI, and of course, immigration has really taken off. So all of these things are going to cause massive problems for power companies, and so that also means there's going to be expansion and there's going to be increased demand, and that could actually increase profitability, which is something that often doesn't happen with utilities. So what I want to do is I want to show you a 2-month relative strength or performance chart. And what we're seeing here is from July 1st to August 30th. And we're looking at the leaders of late over the past couple of months. It's been real estate, it's been utilities, financials, industrials, a few others, but the big guys really have been these two. And the losers have been the former leaders. Technology, it underperformed the S&P by 6.7%. The far right, the worst performer in the past 2 months. Next worst performer has been energy, and then discretionaries, and then consumer services. Guess what were the market leaders during most of 2024, let alone 2023? It's been technology, discretionary, and consumer services in particular. Now they're in the doghouse, and the overlooked factors such as utilities and financials, by the way, they're catching a bit because rates are going down, and real estate. These are interesting transitions we're seeing, but I just want to talk about utilities. It's outperformed the S&P by 9.38%. When you come to the Money Show, you'll see why I'm focusing a little bit on utilities today, although there's one other that I'm going to talk about as well. So utilities, you can buy Canadian or U.S. utilities, and I just want to show you why I kind of like the Canadian utilities a little bit more right now. If we buy the Canadian utilities, the ETF I'm looking at is by iShares. It's the XUT on Toronto. It is less diversified and more concentrated. It's 75% weighted in the top 6 stocks, and it's only got 10 stocks in the index. So understand that the Canadian ETF is far more concentrated. The US index has 49 stocks, so that's quite a bit more than 10 stocks. And it's only 41% weighted in the top 6. So it's not so top heavy, so to speak. Okay, now, of course, when you've got 10 stocks, it's easier to be top heavy in that 6. But be that as it may, it's a more diversified index. The Canadian ETF is 45% weighted in electrical producers, whereas the US is actually more than that. So I still do like the US producers because I'm a bull on power, but I just like the chart, as you're going to see, a little bit better for the Canadian ETF. But both of them can have a containment or a mixture of other utilities beyond power. They have gas, they have water, they have waste management, and of course renewables, which is just another power type generating source. So let's look at the US first, because we were looking at that US graph, and you will see that the iShares US Utilities ETF is breaking out. Now, by the way, if you take off the dividends and look at a chart without the dividends, you will see that the iShares IDU ETF is actually only hitting the previous highs. So it actually didn't break out if you take out the dividend. And I probably should have put the chart without the dividend up here, but whatever the case, it's been a strong mover. Okay, now what you are seeing is that it's a little overbought. You can tell that by looking at the angle of ascent here. Meanwhile, money flow is a little bit leaving the sector. That's the momentum of money flow. MACD is way overbought and RSI is overbought. It's right above the 79. Okay, so keep in mind that you may see a pullback on the US utilities. This is some of the top, again, the top 6, which out of 49 stocks is interesting. You could probably get a feel that some of them are looking, like waste management is a little sideways, and Constellation's kind of bearish. American Electric is a little sideways. Even Duke and Southern are starting to look a little bit like they're basing a bit after a strong rally. So keep that in mind, that maybe right now the Canadian utilities have more potential upside just because they haven't moved so fast. And we'll see that chart in a second. So here is the Canadian utilities. It's still iShares. So we are comparing the same companies, ETF companies, utility offerings. This is the Canadian XUT index. And you can see what I like about this. And by the way, even if you were to take off the dividend off of this, you would find that the chart looks pretty much the same. There's a neckline here, and it looks like it's just starting to break out. Okay, so that's a more bullish chart to me from a near-term perspective. It's not rolled over on money flow momentum, as you saw with the US index. Yes, it's overbought, but not as overbought as you saw with the US index when we look at MACD and RSI. So overall, I really like the look of this. Me, I love breakouts, and this looks to me like the beginnings of a breakout. Okay, the top stocks in that ETF are Fortis, which, look at that. That's a big breakout. Now that's pretty overbought, but you can tell it's a nice breakout. If it pulls back, it'd be a great buy. I think Brookfield kind of sideways at old highs, but Hydro, interesting. Emera maybe breaking out. It does look like it's breaking out. AltGas has been in an uptrend, possibly needing to pull back, but it's been a good chart. And the Brookfield renewables, I don't remember the name of the BEP, is a lousy chart, and that's because we've talked about this on my videos and on my blogs, but there's a lot of new technology. Sorry, I should say technology that is quickly being found to be inefficient. Solar panels, the wind power producers, and even EVs, batteries. All of this stuff is kind of first stage. And if you look at my blog entitled "What You Need to Know," it was a really important blog, and I noted that the future is where this stuff is at. So you're going to probably see a lot of these renewables and kind of popular solar panel makers and stuff suffer a bit for a while yet, but there is new technology coming, as I describe in that blog called "What You Need to Know." And so I'm going to focus on old-fashioned stuff because there's a bridge between now, when we're just coming into that point where we need the power, but we don't yet really have the technology and we can't build the nuclear reactors fast enough. We are going to be relying on the old-fashioned stuff like fossil fuels. So, you know, anybody that's kind of involved with that, like alt gas and stuff, I think is going to be doing okay, as well as some of the older companies that are not necessarily fully focused on renewables. Most of these companies like Emera are getting into the renewables, but they're not all in. So I think that both Canadian and the U.S. utilities look bullish, especially from the relative strength study we looked at the beginning of this video. The U.S. stocks are a little bit overbought. They're probably going to pull back, but they probably long-term look pretty good. The Canadian breakout looks early stage, and that's why it's my favorite right now. And I think within these sectors, you really want to avoid the underperforming stocks and dig in a little bit deeper. In other words, you could buy one of the two ETFs we looked at, but what I personally am doing is I'm going to be looking at the stocks individually. So keep that in mind. I think that the Canadian one is the better looking. It's still early stage though, so you might want a bit more confirmation before you actually put both feet in it. And I think the US ETF is very definitely overbought at this point, so I'd be a little cautious in the near term on that. So either way, though, there is rotation happening, and we have to respect that. So we want to keep our eyes on this particular sector for opportunities. Thanks for watching, and again, I do hope to see you at the Money Show. Have a great week.